Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Joe Caccera, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Caccera.
Welcome in, Joe Caccera with Real Estate Radio Live, the podcast series, as we finish up another week. It is Friday. I am sitting alongside Bobbi and Buddy. Good to have you guys here again.
Hallelujah. Great to be here.
We are yet on another Friday and excited to be sharing part two of the insurance. We'll bring in our guests in just a minute. Last Friday we did the same because there's so much to insuring your home, the things you need to know about it, and we're going to dive in a little bit deeper with our guests in just a minute. Before we do that, again, just a reminder, if you need some help on buying or selling a home, or if you're thinking about it, this market is really a tough one to navigate in. It really is. Make sure you're working with someone that understands what they're doing. Bobbi Decker could help you with that. A couple different ways you could reach her. Email Bobbi@BobbiDecker.com. You could text or call 650-346-5352, or visit the website, BobbiDecker.com. That's BobbiDecker.com. On the finance side, if you are looking to purchase a home, you need some financing or maybe some consultation around that, whether you could afford, or maybe a refinance. I'm a big fan of consolidating the first and seconds right now. Home equity lines will continue to go up as the Fed raises the prime. Give me a call, 408-838-9060, or you could always email joe@reradiolive.com. All right. We are, again, going to invite in our guest, and it is Kelly Corwell Cansler. She did such a great job. Last week, we're going to do part two. We had so much great stuff. I think we talked about the good, the bad, and the ugly. Did we get to the good, or did we cover the bad or the ugly?
Mostly bad and ugly. They're better stories, aren't they, Kelly?
Yeah, unfortunately, these end up with the bad and the ugly stories that make people aware that they need to be doing some better and some good with their insurance policies.
Yeah. Well, let's, if you can, real quickly, Kelly, before we dive in, if you could give our listeners, again, an idea of your background and then your current kind of roles and responsibilities with your firm today.
Absolutely. Thank you very much. So I own a farmer's insurance agency in San Mateo. I've been in business since 2008, so I started in the down market of everyone's businesses from a scratch agency, and now have grown, purchased other books of business, and am within the top percentage of farmers agents nationwide. So I really appreciate the opportunity to be on today and the opportunity to get in front of more people and educate them about their insurance situation.
There you go. Thank you, and thanks for being with us again today.
Now tell us, Kelly, we kind of were doing specific things. Tell us about this underinsured. That's a very, very scary scenario. When you talked about it at the seminar I attended that you gave, that is scary. Scare them. Scare them into doing something, Kelly.
Well,
for their own good, of course.
Mm-hmm. For their own good. Sometimes scare tactics do make people make action. So we are finding that there are many homes. I mean, I would say probably over 50% of homes are underinsured. And they're underinsured for reconstruction costs. They're underinsured for their liability. But primarily what we're seeing is you need a minimum of $300 a square foot on your dwelling coverage on your home insurance policies. And deck pages that I see left and right are still going with under 200 or less sometimes. And it's a really scary thought, because if your house, you leave for vacation and you come back all happy and refreshed, and you get a phone call that your house is burning to a crisp, and you've got no way to see, okay, well, is everything going to be okay? Well, hopefully the agency that you're working with is taking the time to do annual reviews with you as a client, because that's the only way we're going to know if things are up to date. Unfortunately, so many homes over in that San Bruno area that was affected by the explosion were severely underinsured. They hadn't had their policies reviewed in 20 years. They were hoping that the companies that they were working with were doing the right thing for them. However, they were having to go back to the insurance underwriting and reconstruction cost calculators to find out how they were going to rebuild those homes. And unfortunately, many of them were not up to date. People had done remodels, had done additions, and that information was not up to date in the computer system and not reflective of the amount of coverage that they needed on those policies. And sadly, San Bruno property records got lost somehow, even though the fire wasn't down there, and they only had the insurance policies to go from to start the rebuilding process. And they were severely underinsured, lacking the funds they needed
a double whammy.
Right. Yeah, to basically be able to rebuild their homes. So many people didn't have any records of what they had inside the homes. That's something that I truly remind clients to do all the time, is to do a home inventory. So take photographs of everything inside your home, because if you do come home and your house is a pile of ash, not only is that just a catastrophic situation, but now you've got to go through and figure out everything that was inside the home. So that's a two-part. You want to make sure the house can be rebuilt, and you want to make sure that everything inside can be replaced. And then the last part of the underinsurance is definitely the liability. These home values have just skyrocketed. And now, instead of Mr. and Mrs. Smith that live at 123 Main Street bought their house for $80,000 35 years ago, are sitting on $2.5 million in real estate assets, and unfortunately their home insurance and their auto insurance and all the rest of their liability coverage is still showing maybe $100,000, which back then was plenty of coverage for their assets back then. But now they're sitting on $2.5 million in assets in just their home, and should be having an umbrella policy, making sure that their liability insurance coverage is matching those assets at risk. And that's the other thing that I'm seeing really scary for people out there, because I've had one client, elderly client, run over someone in a parking lot, and thankfully when they came to me, I added on an umbrella policy for them. They owned commercial real estate, residential real estate, and that other party was going to come after them for as much as they possibly could. And so, you got to make sure that you're working with a professional that's looking out for your best interest. It's going to take that time to review those policies, because the last thing that you need is to make that phone call to the insurance company and find out that you're not covered, or you're not covered enough. And that's the worst thing that you can have happen. So.
All right. Well, that is good information about uninsured. And real quick, before we talk a little bit about some of the other things, the fires and the floods, et cetera, but even someone that came to me, someone that's remodeling their home, right? How often do people... And again, they may not get a loan for it. They may take $100,000 and add a bathroom or bedroom or do something. How often do I wonder that people automatically think, gee, I wonder if I should call my insurance?
They don't.
They don't.
Right.
I think that's what Kelly's saying.
Yeah.
You know? Can you imagine?
So many different reasons, right?
Yeah, 20 years behind in their insurance on their property, and look at what's happened here.
Watch, everybody's going to be scanning and emailing Kelly. Hey, please take a look at that.
Well, and that's something that I'm happy to do, because the conversation has to be had with the insurance company at least once a year. You have to have your policies looked at least once a year. I mean, for crying out loud, you go to the dentist twice a year, and you're less money to the dentist than you're paying on your insurance premiums every year. So why not to the person that you're putting more money in there? I mean, realistically, you're putting more money towards those expenses, and your insurance is one of your top expenses. Why aren't you putting your attention there? And that's unfortunately something that people just put in the back of their mind and say, I've got more time for this, that, and the other, but they're not taking the time to spend 1 hour a year with their insurance company and make sure that what the place is
Good point.
Right.
We'll segue a little bit. So we hear about the wildfires in California and the floods in the Midwest. How do these affect us? Because you do hear stories, insurance companies, right? These are the reason premiums are here and there, and they're different in different areas. And so give us a little insight on that.
Yeah, so here in California, we've got a variety of different kinds. We've got lovely secluded homes out in the mountains. We've got homes up along the coast, around the lakes. around the rivers and so forth. So every property in California has got different levels of risk. And one of the big things that we're seeing is yes, those wildfires. California wildfires are something that we're known for. And unfortunately, the insurance companies have segmented their risk away from those high fire zones, what they call them. So a lot of the houses that are beautiful and in these lovely wooded areas are going to have to pay the higher premiums to have some of the high-risk insurance carriers that will take on that opportunity to insure those properties. So the companies like Lloyd's of London and Lexington and so forth are those companies that are going to be pretty much your go-tos and your only go-tos for some of these high fire zone risks. We unfortunately have big issues with the 100-year flood zones here, even on the peninsula and in certain areas of the Bay Area and of California. And those are not going to be reduced in price. FEMA's just going to keep raising those rates. There are some third-party companies that are taking on some flood insurance risks that are not FEMA-backed. They do come at a reduced cost, but they are very selective of who they're taking on. But just know that there are some other opportunities out there other than FEMA that are coming to the market.
Right, I know. I just got an alert because of FEMA, because of the fact that the flood insurance is doesn't it die on August 31st or something? I think it hasn't been re-upped by Congress, but we all know we only have a Congress so that we can be jealous of where they go for vacation because they don't do any work. I mean, it's obvious. It's just
they get pretty good benefits, though, don't they?
They get great benefits, no work. I mean, I want that job, but I'm way too old to chase after it now.
You have to lie too much.
I'm not very good at that. No, I'm sorry. That's something I just haven't become real good at. But yes, I know that red alert went out because I had to answer it and actually get back to it and respond to it on my phone.
Mm-hmm. Mm-hmm. Yeah. One of the other good things that most people aren't aware that can be done is grandfathering of a policy, changing ownership of a flood policy from the sellers to the buyers. In times where, they're going to need an elevation certificate or they don't have enough time to go through the process of the 30-day wait period and all of this for a new flood insurance policy, you can, in fact, take a policy from the seller and submit just a basic request of change ownership form, and the buyers can take over that policy.
That's very good.
Most people don't know that you can even do that. I was working with a client about 2 weeks ago and buying a house in North Shoreview, and the sellers had a flood insurance policy. The buyers needed a flood insurance policy, and we were coming really close on a deadline to get that close of escrow taken care of, and I was going to go ahead and do the grandfathering for that policy, but luckily, because of the age of the property, we didn't need to get an elevation certificate, so we were able to issue a brand new one.
Yeah,
but it was an option.
That's great information.
Most people don't know that that's available.
That's good information, a perfect example. All right, we're going to take a quick break. When we come back, we're going to continue our conversation with Kelly Corwell Cansler. She is a farmer's insurance agent. We're talking about coverage, much more, and understanding what you need and what you don't need. This is Joe Caccera sitting alongside Bobbi and Buddy. We'll be back with you to continue in just a minute.
For more information on today's program, visit reradiolive.com. That's reradiolive.com.
Are you and your lifestyle fulfilled by the properties that you own? Do you need to rethink or look at different options, perhaps even in different places on the globe? Either locally or globally, you need competencies and commitments to achieve your goals most effectively. Bobbi Decker, working with her teammates in Sotheby's International Realty, with over 750 offices in 52 countries and territories, can help. Even here in the San Francisco Bay Area, if a property isn't what she or her team believes they can effectively market, they will find a high-quality Sotheby's agent that has the right expertise. For more information or assistance, contact Bobbi at 650-346-5352. Visit her website at www.bobbidecker.com or email bobbi.decker@sotheby'srealty.com. That's bobbi.decker@sotheby'srealty.com.
Welcome back to Real Estate Radio Live. For more information on today's topic or guests, just visit reradiolive.com. That's reradiolive.com. Again, your host for today's edition of Real Estate Radio Live, Joe Kuchera.
Welcome back in. Joe Kuchera with Real Estate Radio Live, the podcast series, sitting alongside Bobbi and Buddy. It is a Friday, and we are in part 2 of our interview and conversation with Kelly Corwell Cansler. She is a farmer's insurance agent, talking about the ins and outs insurance, really covering a lot of information. My guess is, I think Kelly had mentioned nearly 40 or 50% people are underinsured or don't really know what they have. So before I pass it over to Bobbi, I would say that if you're listening to this, get a hold of your insurance agent, or if you don't have one or you're not happy with one, Kelly could probably help him, right?
That's right. And Kelly's going to give her information. I think her arm could be twisted. And she's really a nice person to sit with. She isn't trying to push things at you. You know, and you walk away going, I know so much, my head hurts. And, oh, my gosh, I bet you I'm in a lot of trouble on insurance. Kind of those two thoughts run through your head. But, Kelly, on my last couple of escrows where there was a loan involved, they actually came out to the property to check what they call the overall condition of the property. Can you just elaborate on what you're looking for when you do that?
Absolutely. Most everyone around here has a pretty good pride of ownership with their properties. However, there are definitely properties that are in a bit of disarray. And so we have to have acceptability maintenance conditions that are, you know, the roof is in a good condition, or if maybe buyer to seller knows that the roof has to be replaced, we put a note in the system that that's going to be replaced within 30 to 60 days, and that becomes not a decline issue. Making sure that the siding is not all peeling off and the paint is not look all just out of sorts. Making sure that the trees don't have branches overhanging onto the roof that are basically just an opportunity for a fire just to easily escalate it over the property. Obviously pools.
Green swimming pools.
Green swimming pools.
And then they say, is the filter working? And it's like, I don't think so.
Is there a filter in it?
Exactly.
But making sure the pool does have, you know, a fence around it, or the property have a fence around it, so that not, you know, little Susie walking down the street doesn't just go happen to find herself in somebody's pool, you know, that she can just get access to and potentially, you know, get herself very much hurt in. Another issue that most people don't understand, you know, and this is really more, you know, once somebody's in the property, is these big trampolines. Trampolines are a huge exclusion on liability insurance, and most people don't know that. And so you do have to disclose that kind of thing as well. Mostly it's, you know, obviously when the buyers to the sellers, if there's one from the seller still sitting on the property and they left it behind, obviously that could be an issue. But if it's something that they're getting rid of, then that's no problem. But yeah, just making sure that the home is in good condition, doesn't look weathered, you know, no broken windows, all the railings are up for all the staircases. That's really important too. And just making sure that the property is in a good condition. Really, the roofs end up being a big issue that most.
Yeah.
And what do you allow as a roof coverage now? No shakes, no more wood shakes. It all has to be fire retardant.
We still do wood shakes.
Do you?
We do. We have a new home product that was released about 18 to 24 months ago. And since that product came out, we can do the wood shakes with that particular product. There are, you know, obviously it can't be in bad condition, and it can't be in a certain fire zone. So it can only be in a low fire zone, has to be in a good condition, and we can still take the wood shakes.
That's very interesting, because I've been sitting here thinking they couldn't. Buddy, ask her your questions. You've kind of been quiet.
What I've been doing, Kelly, is I've kept count of the 2,500 subjects we've already covered on insurance. But that, you know, I mean, that just represents a ton of information.
It really does.
that you've been sharing with us, and I hope everyone that's listening in will call their agent, or Joe said, call you if they don't have a good agent, or talk to an agent, or if they haven't done their insurance for the last 20 years, their agent may be dead. I hope they had good insurance.
As well. That's for sure.
But in any case, with all this information, is there one top thing you want to tell a seller, or one top thing you want to tell a buyer when it comes to what they need to worry about in insurance? Someplace, maybe a starting point that helps people understand what's most important and how they get going, on both for a buyer and for a seller.
Yeah. So for the seller, first and foremost, they need to be working with an insurance agency that is going to be able to pull all these reports for them in advance of even putting in an offer. Make sure they've run a flood, a flood determination. Is the property in a flood zone? Because in my opinion, if that property is in a flood zone and they're buying that house knowing that they're going to have to carry flood insurance for the length of their loan, just add about $40,000 to that purchase price, because that's about how much it's going to cost over the life of that loan.
That's a big number.
Because the prices do range and they're going to continue to go up. So, on an average, that's a pretty good figure to keep in mind for that buyer. Make sure that the loss runs are run in advance. So finding out about the prior claims on that property. My sister and brother-in-law bought a house in San Mateo, and it had over $200,000 in water damage claims that were put on it in the last 3 years. Wow. Thankfully, because of those claims, all the plumbing had been replaced. So they went into the property knowing that they were going to have to spend a lot more money on the home insurance because of those claims, but they also went into it knowing that everything had been replaced after it. So they made their own educated decision on that.
That's probably because they had somebody in the family that knew what to tell
loved them and wanted to guide them.
Very true. Very true. So the claims are going to tell you a lot about the property. It's going to kind of give you its story, its past of what's happened with it. The other thing is finding out if it's going to be in a high fire zone where you're not going to be able to get a preferred market company for its insurance. So kind of going over these things that we've touched upon in the prior segments, these kind of acceptability issues or the fire issues or the flood issues, just having someone that can help you find out if there's going to be additional costs that you're going to have to come up with after your close of escrow. Say I take a look at the property, I see that that roof is in just bad shape. It's going to have to be replaced. Well, they may or may not want to get into that purchase contract knowing that they're going to have to spend another $20,000 on a roof. They might not want to get into that purchase contract knowing that they're going to spend another $40,000 on flood insurance, or they're going to have to pay a 40% higher premium because now they're not going to be able to get that preferred company like Farmers or any of the other ones that are going to be able to give them that maybe $500 to $700 a year premium for their home insurance, and now they're going to have to spend $1,500. $1,000 to $1,500 on their home insurance. That's number one, is to make sure that all of these things are looked at in advance, because it's not going to just cost them more on the insurance, but it's going to cost them so much more in all these other kind of X factor costs, repairs, higher insurance costs, all these other things that they're going to end up having to do. And then as far as sellers just need to know and be educated on the longstanding issues that they may have on that house by filing those claims, on their home insurance premiums, on the fact that they're now putting that scarlet letter in the claims history for that property and if they go to sell it. So I think the sellers have a little bit less on their plate than the buyers, but the sellers do need to be educated about filing those claims and being able to have those, off-record conversations with their insurance agent, because if they call the 800 number, they're going to just file those claims right away, and they're not going to give the cost-benefit analysis to that property owner, to that seller, and let them know what's going to be the ramifications of those actions. So I think those are kind of twofold.
So, Kelly, that really makes an important comment about the realtor as well. They need to work with their seller to make sure they understand whatever those issues are and how they roll up as a potential insurance problem for the new buyer coming in. So it's not only the seller that needs to know it, it's certainly the realtor has to be a true professional and understand these issues as well.
Mm-hmm.
Well, we have, Kelly, we got about 2 minutes left, and we are going to save the biggest for the best to last. If you could give us an overview about earthquake insurance. So, I mean, unlike other parts of the country, they worry about floods, hurricanes, tornadoes, and, shelters and all this other stuff. Well, us in California, we're just moving and a shaking. So, if you give us about a minute or so, give us your thoughts about earthquake insurance.
So earthquake insurance, under 20% of Californians buy earthquake insurance. There is no coverage through any primary home insurance company for earthquake. You just better hope that somebody goes and grabs that gas line and catches the place on fire, because there's not going to be any coverage for that home damage in the event of an earthquake. Earthquake insurance is expensive. In my opinion, if someone's going to be a resident of that house, if they're going to be an owner of that house for about 8 to 10 years, my recommendation is actually spend the money on the retrofit and try and get the house obviously improved in value, but also what your primary reason for doing a retrofit is to secure the home in the event of an earthquake, make the damage less, if not none, in the event of that earthquake. Because if you're going to spend about $2,000 a year on earthquake insurance for 10 years, that's $20,000. If you're going to spend the $20,000 on a retrofit, you've improved the value of your home, and you're warding off the issues that could potentially happen from that earthquake. So in my opinion, invest in the property and do that retrofit. And in the meantime, buy the insurance up until you do that done. That's a great recommendation. I don't know that I've heard that one before. Invest in the retrofit.
I told you I'd bring Smarties.
Yeah, that's really good. Really good. Unfortunately, we're out of time, but I'm telling you, these have gone really fast, and the reason why is because it's a lot of good information, and it's so much that a lot of people don't know. And, as we close out today, you guys, one of the things that was really obvious to me of these two parts were that now I know why 40 to 50% of people really are uninsured and don't really know. I mean, I'm in this business, and I see a lot of this stuff, and I have properties myself, and I'm learning something.
Absolutely.
When was the last time?
We're not going to. Kelly, you will not hear us admit.
Scratch your head. If it's making you scratch your head, there's something that you've got some homework on.
I was scratching my head a lot during that second segment, darn it. All right. Well, Kelly, thank you again so much. You're a gracious guest, and you gave us a lot of great information.
Thank you, Kelly.
All right. Joe Kuchera with Real Estate Radio Live, sitting alongside Bobbi and Buddy as we close out the show. Thank you again for tuning in today. For more information, you could always go to reradiolive.com. Until next time, take care.
You've been listening to Real Estate Radio Live. For more information on today's program, visit reradiolive.com. That's reradiolive.com. Subscribe to our podcast. Discover more at reradiolive.com.